Good afternoon, good evening, good morning. If this is the case, ladies and gentlemen, this is your captain speaking. And once again, we are reviewing the situation on the stocks exchange, on the stock exchange market, the American market. On our previous video, we've left the stock market right here, right on this, before this candle happened. So it was 3:30, approximately 3:20 p.m. CET, 9:30 US Eastern Time, if I'm not wrong. That's where the market opens. And what we had by that time is a situation right before the opening where we had a bullish divergence. So we checked the 15 minutes chart and noticed that this low on the price did not correspond. So this low, so this last low, which is below a previous low, did not correspond in the MACD or MACD indicator. So this new low here is higher than a previous low. Normally that would be an indicator, a bullish indicator, so a bullish sign, and it may mean, it is not mandatory, so all indicators are not mandatory, but something like this would mean that price has certain probability to turn up and advance in the opposite direction. So the downtrend, the local downtrend would stop. We were talking that we were saying that trading the opening, the cash market open was always tricky because huge volumes normally appear by that time, and during the first 30 minutes, price can evolve in some very tricky ways. Let's say it like this. It can grow up a lot, then drop a lot, then grow up again. So if you have a strong account in terms of money, maybe that you will not notice that volatility too much. But for example, for small retail accounts or someone who has hugely leveraged and trading intraday, that would mean some important volatility, and trading exactly at that moment is very tricky. Let's check which was the outcome in the end. So this candle here was our opening 15 minutes candle. As you can see, I'm on a 15 minutes time frame. Just to remind you that I use this custom MACD or MACD indicator. It's called MACD 4C, default settings 1226. I use a standard moving average with period 89, and the sticker I analyze is SPX USD because it's a CFD from one of the brokers. Why I like it? Because it follows pretty well the E-mini, the S&P E-mini futures. So the price of the official E-mini futures doesn't diverge too much from the from this CFD. So once the 15-minute, once the cash market opened, as we expected, it started to grow higher. As you can see, it made from 28.29 it went to 28.40 in 15 minutes. In fact, it was less than 15 minutes. I think it was 6-7 minutes from opening. but then the price reversed and it started to fall. I highlighted here some reversal zones. As you can see, we were saying that if market holds this reversal cluster, there was an important support around here. We are now on 15 minutes time frame. If I would switch to 1 hour, that resistance zones, the resistance zone will be much clearer. So we expected that price could hold, having the bullish divergence and having this strong resistance zone, market could bounce, price could bounce inside this reversal cluster and revert to higher. This has not happened. And furthermore, you can see this bit here, so this area here is the US trading session. As you can see, it was a complete range. It was a wide range. It is known as a whipsaw. So this is the worst, let's say, trade part, one of the worst cases which a trader could meet, because you expect, first of all, the price goes through support and resistance zone. You can see that here it broke it, it popped, it broke it to the upside, it popped, it broke it again, and then it just tried to break it again but couldn't. So obviously all this volatility is good if you have a system dedicated to trade these particular cases. But normally this trading these kind of candles is not very comfortable at all. And as we can see, in the end it is forming a sort of a triangle. Maybe it hasn't finished yet, so maybe it could pop a little bit higher, maybe here, I don't know, or maybe it will just, this is not a triangle, so it has it had this leg up, and it may have another leg up to approximately this value, maybe higher. We don't know, it is still to define. But what I'm trying to say is that trading, this was the candle, the opening candle, and the expectations we could have based on the MACD indicator can result, let's say the outcome may be very far away, may lie very far away from what we expected. As you can see, it bounced, then price went down, it made another, so from this top it made almost 20 points down, then it started to grow, and you can see that we had quite a precise divergence here, but it converted into a sort of a whipsaw because price didn't found, has not found, it's still in this cluster, let's say, so price has not found a direction to follow, and it was bouncing in and out. This in fact is quite common on market openings. So what I would suggest is do not trade in the first, at least in the first 30 minutes of the US session, because as you can see, fortunately this doesn't happen oftenly. It happens from time to time, but it's not quite often. Probably all this range trading on the US session happened because previously as you can see we closed This is the 5 a.m. So we started the futures started the new trading session somewhere here, and before we arrived to the US session, which we arrived more or less, yes, at this level, so somewhere here, price has already dropped importantly. So let's say the main part of the daily movement has already been done, and the traders didn't want, they just didn't want to drop lower. It could go to I don't know, 2% drop or something, but that was not the case. So even on trendy, let's say days, when you can see a clear red candle, so a clear downtrend during the day, on the trading session with which supposedly has the biggest volume during the day, you can easily find something like this. So we have to be very careful trading the market openings, the US market openings. How could we trade these kind of candles? Because obviously when I'm here, so just imagine we are here in this part. So after the market opened, our divergence got deeper, we have this candle, and it's a good moment probably to buy the dip. However, we are below our support and resistance zone. So excuse me. So price supposedly broke this zone, and it has to go lower. What I suggest is expect a backtest. So if price goes below, then it pops, but it doesn't get, you know, this. If it wasn't because of this part here, the small false break above the support and resistance zone, obviously I would not consider any long entries. So I will just short the back test, so it goes lower. So what I would suggest always is expecting a back test. If there is no back test, so if price keeps dropping, you have your next support and resistance zone, which you can always use as a possible level for price reversal. If there is a back test and price went down, then you can open the shorts are completely legitimate, and you know your first target would be next support and resistance zone. If it has done something like this, any entry, short or long, is risky, because price didn't behave, let's say, on a common way. It started to do weird things like false breaks. Then you can see, like, strong pull up and strong pull down. So like zigzags everywhere. That's not really good, because it means uncertainty, and on an uncertain market, price normally drops, so it doesn't go up, or it just stays sideways. So here in this cluster here, I wouldn't have any trade. In fact, I haven't, I tried to buy these deep on Nasdaq, not on the S&P. I now hold one position long, but this was a very risky entry because Nasdaq hit my target levels for the overall drop. I had some initial targets where Nasdaq got in the shortly after opening, so I entered long. Now my long is at break even, but I haven't traded during the day. I'm just now waiting to see what happens with the price. So As a conclusion to this small introduction on the opening, on how to trade the cash market open, I can take two main conclusions. First one, all entries are quite risky, even if you see it quite clear, even if you see the divergence on a short time frame, on a small time frame, on 15 minutes, mind that price still can go in the opposite direction, because all indicators are just indicators. They are no rules, they are not mandatory, so they just have certain probability to happen. They indicate a certain probability of something to happen, price reverses or just keep on with the trend. And the second conclusion is that even after market has opened, if you see that there is something weird, like this false break here, this false break here, if you are not secure, if you are not sure, if you don't know what you do, just don't trade. So cash is also a position. You will have your trade, I promise. During a week, even if you are not a day trader, if you are maybe prefer to buy, let's say, a breakout and backtest of support and resistance zones, every single week you have an option. For example, last week we had these options here, because this support and resistance zone, this reversal cluster, has been was backtested 3 times. So obviously you could buy here. If you prefer to hold, you hold. Otherwise your long would be closed at break even. Then you'll probably see that price started to go up and you would buy again. Maybe if you prefer to hold, you hold, then next day you'll be closed at break even. And here you could try to buy again, and then you hold to the to some sort of a target you had. Here we may have the same case. So all this is maybe just a short sideways before price keeps going down and backtests this support and resistance zone as we expected initially. Then, if this scenario is valid, shorts can be opened. The only problem is that you will have to set a very long stop loss, and probably price still could manage to get to it before going lower. So a lot of attention here. I would, if you are out of the market, I would now wait until price gets to this reversal cluster and see how it behaves. If it starts to pop, then longs can be long entries can be opened, and maybe we would expect new all-time highs above this level at some point. Thank you for having watched the videos I recorded today. I hope you managed to get some useful information. You could email me. I'm on TradingView. I'm quite frequent on the public chart on stocks and indexes, and I hopefully will record some more videos with some things that I think are quite curious and may help traders on their endeavor. Many thanks for having watched this video. Once again, take care and trade well.